Hey everyone, this is Mark from Stocks and Cash. It is March 26, 2018. Here with your market update video, talk about my holdings and some potential trade setups for tomorrow. So the market had quite a rebound today. Not a very good day for me. I was relatively short on Friday. Not much to say other than, the market went against me and it didn't do what I thought it was going to do. I was expecting some kind of doji, some kind of maybe test down here or an open low where we bounce off of this level and then kind of run up. Granted, we did get a tail on this candle here. We got a low wick that kind of came down and almost tested, but it reversed before I thought of getting out of positions. And so, I got kind of caught with my pants down, and hey, it is what it is. Now, I don't have enough money in my account to day trade, so a lot of the trades that I bought on Friday were near the open and were doing really well. I was very profitable on them, and then today they pretty much got erased right at the open. They didn't necessarily come down with the market. For example, I had Texas Instrument short. I had puts on Texas Instrument, and it just kind of ascended for most of the day. So again, not a very good day for me, but hey, it is what it is, and that's part of being in the market. So let's take a look here. The market certainly has rebounded today. It needs some continuation for confirmation. Right now, futures are up about 70 cents, so that's not bad. We're kind of approaching the 8 exponential moving average, so that would kind of be my first target here. Let's see how we behave when we touch this 8 simple moving average. Are we going to break through it? Is it going to get rejected? So that's kind of my first target. Second target would be here, the 100 simple moving average. And then the third target, second and third, fourth, fifth, whatever, all these targets kind of showing some confluence here. They're all starting to gather around this 270 level. So that's where I would be looking to maybe scale down of your bullish positions if you're in bullishly. I think we have a good opportunity to get there. We are already through the low of this candle here on March 2nd. So again, I do think there's some room to run. Maybe we come up and touch 270 tomorrow. I don't know. With the way, the market was so powerful today, it's not out of the question that we could come up and touch this level. There is also a gap here that's kind of hidden by this 270 marker, as you can see, between the high of 322 and the low of 321. So again, gaps like to fill. So 270 is looking like a really nice spot to get out of positions. Now, nothing says that we have to come up and fill this gap. We could kind of break down and head back down bearishly, but I do think if that happens, we'll hit 270 first, and that'll kind of be our make or break. Do we continue on higher and test this potential downward trend line? Do we come up and fill this gap finally at 280? And if we do we come up and retest all-time highs? Or do we come back and get rejected here at 270 and come back down testing 257.55 and maybe even 252? Time will tell. I can tell you that I've gotten into some bullish positions at the end of market close today, so I'm looking for kind of a quick scalp sometime tomorrow, take some profits, ease kind of my losses from yesterday. I did get out of all my bearish positions, so that's kind of what I'm thinking for tomorrow. Now, as far as this gap up goes, and it may have happened in other places, but I was just looking back here, historically, and the only real gap up that I see, now there's one here, but there was a doji type candle that gave you kind of warning that, hey, this downward pattern might reverse soon. So the only one that I can really see is this one here on 627 back in, gosh, I don't know if this is 2016. I think this is 2016. Let's just zoom out real quick so we're sure. That's right around here. So yeah, June of 2016. We had this ugly wick type candle. We gapped down, hit a level here, which I'm not sure if this level was something I drew in or if there was actual support. Well, let's look back and see. Nothing really obvious, maybe here, but that wouldn't, that's not a level I'd be necessarily looking at. But regardless, this is where we stopped on that day on 627, and we just rallied from there. So, that's the only time I've seen such a huge move on open and then continuation up through the day historically when we're kind of in a downtrend. So, hey, I mean, it happens, right? I was looking for a doji, we didn't get it, and looks like we might be going up to test the 270 level. So, again, that's my next target on the SPY. We're at 265.11, so we have about $5 to get back up and potentially close this gap here. And then it'll be really interesting to see where everything goes from there. Let's take a look at the Qs. Qs, again, as we said yesterday, are looking very strong. You know, we did close below the 100 simple moving average, but we never came down and tested the 200, which again, I'm not showing here, but we didn't get that far down. We did hit this target here, this first target of the first extension here, the 127% extension on the fibs. That was from this low here on 3.2 and the high that we put in on 3.13. We also bounced off this ascending trend line. So, you know, again, we gapped up quite a bit. There wasn't really much opportunity to sell your positions. You know, we did kind of come down overall as the market, you know, the SPY and the Qs, but again, not all stocks had this nice low wick to get out and kind of, you know, reduce losses. So I was unfortunately not able to do that. And so again, I got caught with my pants down, and it was a tough day for me. But you know, again, that comes with trading, comes with learning, and you know, hopefully I can do better next time. So similar to the Qs, similar to the SPY, the Qs have a gap here between 322 and 321. Be interesting to see if we go up and fill that. The low of this candle here is 166.19. We're currently at 164.4. So what did I say? So we got about $2 or so on the Qs to fill this gap, and then there's another gap up here at the 170 level. So it'll be interesting to see if we fill them. Tech is looking very strong. It has been, really, even though it's been in this down pattern. The downturn wasn't nearly as bad as the SPY and other markets. So I do think the Qs are looking pretty good. So let's take a look at what I got out of today. One was McDonald's. Oops. So you can see McDonald's gapped up and it just never looked back, unfortunately. So, you know, and if you look at indicators, let me just step back to the SPY real quick. Let's take a look at the indicators. I kind of ignored that part of it, and we'll go back to McDonald's again. But, you know, the Stokes were extremely oversold. MACD was looking weak, and RSI was looking very oversold too. And historically on RSI, you can see anytime we've come down and touched this this 30 level, we've essentially bounced. So let's zoom in here. You can see that we were down on this and we bounced. Back here in this range, you know, dojis were put in, we bounced from there. Yes, we came back down, but it was another good indication that we would bounce. We did not bounce here, so you know, it's not an absolute. Nothing's really absolute in trading. So we didn't get the bounce we were looking for on these touches, but on this one we did as well. So, you know, I mean, we were at some good support levels on the SPY, but you know, I just wasn't expecting such a huge strong gap up. Again, I was expecting more of a doji candle today with an opportunity to close profits or close positions for profit, and again, that didn't unfortunately happen. So going back to McDonald's, again, it just kind of ran up today. Once we got over this fib level here, I ended up closing my position. I honestly don't have the percentages. If anyone listens to those, I can tell you it wasn't pretty. I think it was around minus 40% on McDonald's. Not too good. Let's take a look at, oh no, I'm sorry. You know what? On McDonald's, it was 10%. Texas Instrument was the bad one. This one was minus 40. So again, as you can see on Texas Instrument, we gapped up. There was a very small wick. Really, I probably should have gotten out when we got a 5-minute close over the 100 simple moving average. I waited until later on in the day, and when things were starting to really move on the overall market, and I got out again, 40% loss on that. Kind of tough. I mean, we were at let's see, what was the low here? 101.34, and we opened up at 104. So I mean, a $3 jump. It's really hard to manage your loss there. It's you've gapped up well beyond your stop, and unfortunately, that's kind of the breaks in the market that you face sometimes. Apple Apple had a huge day today, but when it was coming down, I was able to get out of my position. So it came down, put in a low for the day. When it got back over this level here, the 167.6 level, I closed. So I did still make a profit on Apple. I wasn't as profitable as I would have been down here, but it didn't hurt me completely on that particular trade. American Express, this is another ugly one, and I'm kicking myself on this one. I had great opportunity to get out, held on to it too long. You can see we almost came down and tested the lows here, and then we just kind of carried on. I was going to wait until we tested the AEMA. I honestly got too wrapped up in my losses and just closed the position. So that was a difficult one as well. Verizon. And again, Texas Instrument, McDonald's, I was up on Friday. I had bought those again at the beginning of the day, but due to not having enough money in my account, I didn't want to get flagged as a pattern day trader. Not making excuses, just the facts. Something I need to take into account in the future. But I did not get out of the trades on Friday when I was profitable as I could have, or I shouldn't have gotten into them at all, truly, if I wasn't able to get out of a trade. Although even in hindsight, if I could day trade, I think some I would have gotten out of. I think Texas Instrument, I was up around 30%, so that's probably one I would have taken profit on. McDonald's, I think I was up pretty good on there. Walmart, I was only up about 40%. We'll come back to Verizon. Let's take a look at Walmart. I got in closer to the end of the day on Walmart, thinking we were going to keep on going down, and when it gapped up, it just kind of rocked me. And once it closed over the EMA, that's when I got out. So again, Walmart definitely was a rough trade as well. And then Verizon, I was actually slightly profitable on there. I think I was up about 10 cents. You can see we didn't quite close up above this low here. I got in on this candle here, so there was some profit. Of course, it got eaten up by the gap up, so only up about 10% on Verizon. But anyway, back to the drawing board. Let's take a look at some potential positions to get into tomorrow. So NVDA. Now again, I'm trying to look at this one objectively. I am very interested in it, but we came down, we bounced off the 61.8 retracement level at 232.38 on Friday. I guess we shouldn't say we bounced, but we closed there. We gapped up today and we closed above our moving averages. So I know our next stop now is going to be 250. We're currently sitting at 244.5. So we got about $4.50 to come on up to the 250 level, or I guess $5.50. So I have two calls. I would get out of one call here at the 250 level, and then see if we kind of push through and close above, and see if we run up to our first target. So that's kind of what I'm looking at on NVIDIA. You can see the Stokes are starting to turn, although they haven't yet. RSI is looking strong, of course, since the day was so bullish. Excuse me. The only concern that I'm seeing here in NVIDIA is that we have this bearish divergence. You can see that while the MACD is making kind of, put in a low here, a lower high, kind of a lower low, well, maybe a double bottom-ish type thing here. Then it makes a lower high and now another lower low. All the while, we're kind of putting in higher lows. Our highs are kind of the same, so we're still in this kind of triangle type pattern. What we'd really want to see is MACD turn up and break through here, break through this descending trend line here. Otherwise, this could be a preliminary indication of being bearish or a bearish move coming. So we really want to see NVIDIA come and close up above this 250 level. If it can, I think MACD will start looking stronger, the Stokes will start turning up, and our indicators will start supporting the move. But we really need that close above the 250 level for that to happen. So that's why I'm planning on taking profit when we get to this first target here of 250. Facebook, potentially a risky trade. I know it's had a lot of bad news lately, but take a look at what it did today. You know, it came all the way down and it tested support not only at the 61.8 that we drew, and it did push through a little bit, but it kind of lined up almost exactly here with this pivot back here in July of 2017. We didn't quite touch it, but you know, it came close. And again, you don't necessarily need to touch these levels, but coming close to them counts too. We filled this gap here back in July. And as I said, gaps tend to like to fill, so that one has been filled. Now we put in this hammer candle, which hammer candles at the end of a downtrend, which we don't know if it's the end, but a hammer candle can be a bullish indicator. So what I'm looking for is a test of the 8 exponential moving average. It's currently sitting at 168.19. We're at 160, so looking for about $8. My stop will be the open today, so the low, well, not the low of the candle, but the open, which was here. Oh no, I'm sorry, I take that back. We closed here. The open was here. So we opened at 168.2 and we closed at 160.06. So really my stop would be here at the low of Friday's candle. If we push below that, 158.7, sorry, 158.57, we'll definitely get out of this trade. But you can see that volume is extremely strong. RSI is starting to turn back up. MACD is still looking ugly, but I do think there's a potential move based on the Stokes kind of turning over now, at least to come back and test this level here, and maybe this level as well at 167. So we're basically putting in $1.50 of risk for almost an $8, $7 or $8 move. So it's good odds. I think Facebook is oversold. I think with the strong buying today, you know, after it was down so low, I think there's some great opportunity in Facebook for it to come back up and touch, or at least test the 8 EMA. If it gets through that, you know, we'd be looking at potentially filling this gap up here and coming up to 183, assuming that the market stays strong. So certainly a lot of upside in Facebook if we get a good rally and move upwards. So keeping an eye on that. I am in a couple of calls on Facebook. Let's take a look at triple M, 3M. Oops. So 3M had a really ugly candle on Friday. We retested those lows, bounced right off of it, and closed, you know, above, probably about halfway up this down candle on Friday. Now, 3M is in a downtrend. There's no doubt about that, short term anyway. But I do think there's potential to come up and test the 8 exponential moving average, maybe a chance to come up and test the low on 3.2. This was, let's see, around 226. We are about at 220, so it's about a $6 gain. Your stop would be at the low of these two candles, so around 215. Although that is kind of a lot of, you know, a lot of ground to cover. So really, you'd probably want to get into a day trade on this. Not that you necessarily want to close, but you'd want to have your stop at the low of the first 5 minute candle. So wherever we open, if we get a close above that first 5 minute candle, you'll want to put your stop at the low of that first 5 minute candle as your stop. I guess we could put the stop at the low of the body of the candle. So let's see, we opened at 217.86, so that might be a better stop. You got about a $2 risk for a $6 gain, so it's kind of a 3-to-1 risk to reward ratio. So that's potential play on 3M. Netflix, I think, is a much better play, and actually I'll do that one last. Microsoft had a strong day today. It is getting kind of close to this breakout level here of 96.11. Looks like it wants to test it again. It failed it back here mid-March, but you can see that Stokes have crossed. MACD looks like it wants to cross. and RSI is looking strong as well. So, I mean, this gapped up huge. The low on Friday was, let's see, 87, and we opened at 90.61. So, I mean, you know, almost $3.50, and then we ran after that. So, we've closed above our exponential moving averages. We are looking, you know, volume was very strong. It would be nice to see MACD cross, but you know, this reset is looking pretty nice for a breakout on Microsoft if the markets hold up and we do rally and rebound. The next one and last one for tonight is Netflix. I mean, look how strong Netflix has been. You know, we came up, we put in a low here, so we put in a high, put in a lower, we put in a low, put in a higher high, potentially a lower low, a higher low here. So if we can keep on pushing through, get past this recent high of 334 basically, then I see daylight up to 360 and maybe even 400. So I think Netflix is looking very strong. Again, this will, you know, this will rely on the overall market to be moving bullishly. It looks like it's trying to start. Again, it'll be dependent on those gaps getting filled and if we get rejected by them or continue on through. But Netflix is a very strong stock. I do like the looks of it, and that is something I'm seriously going to consider getting into early tomorrow morning, depending on how we open and what the action is in the first 5-10 minute candles. Now, the only thing I would caution you, as I've mentioned before, you want to try and stay diversified. A lot of the stocks that I've mentioned here are tech stocks. They all kind of fall under the Qs. So, you know, if the Qs have a bad day, you're going to kind of be looking at all of your potential positions being, you know, hit at the same time. So just be careful not to get into too many tech plays unless you're very confident in them. Do your due diligence. Make sure you diversify if you can. But that is what I'm in. That's my analysis for tonight. Any questions or comments, please feel free to leave them. Otherwise, have a great night and good luck trading tomorrow.